It is, what is it, September 10th, and it's also a Thursday. So you're going to be seeing this on Friday morning or something like that, or during the day, or during the weekend. And after I take you through the account, oh, by the way, of course, this is the video log. It takes 30,000 to a million. And I'll show you the account, and then I'm going to talk about a question that I got about one of my positions, which is the emerging market bonds. So I'm going to talk about emerging market bonds for a little bit, why I own a sizable position right now, and then maybe a few comments on Apple and valuations. Sounds legit. Okay, so here's my account. It is sitting at $118,000 and 44, 118.44, and 63 cents. So this is the day chart. This is the weekly chart, minus 2.17%. Monthly chart, minus 1.9%. 3 month, still sitting at positive 30%. Year chart, plus 40. So even though I've taken quite a bit of a dip here from 131 all the way down to 118, it seems like a really big drop, right? It's like $13,000, but in percentage terms, it isn't that much. All right, it's like 14%. Wait, less than that. Anyway, it's like 10% or something like that. So you know, it's all right. I'm pretty heavily weighted on Apple right now, and I think that's why there's issues. Mainly, see if you can see here. Oh, well, I'm gonna run through the account. Oh my gosh, I'm a mess today. So I'm gonna run through the account, and this is the ticker. That's the price of the option, whether it's a put or a call. This expiration date, the number of contracts I have, and whether it's a sell or a call. So from that, you should be able to gather all the information you need about the account. So I'm just going to scroll slowly through it. You can pause your video at any time and examine any of which position you want. All right, so you can see here, big hit on Apple, $1,800 minus today because of the options as well. Uranium didn't help either. And so everything else is about flat to negative, more or less. And this is just my watch list. I'm going to be purchasing some Schlumberger because I have sold 2 puts at $18 strike price, and I'm below that. And this expires on the 25th. So if Schlumberger keeps going down, then I'll be purchasing that company. And I'm really getting into oil, apparently, because I'm going to be buying Schlumberger, and also I think I have, I have Shell oil. Let me go all the way down to the bottom again. And also have Shell. You know, I like Shell. It's a little overpriced, but I pump gas there. Anyways, Shell. So I have 100 shares, and I have sold a call against them at 31.5, and it doesn't look like it's going to hit it. And that expires on the 25th as well. So at that point, I'll be re-rolling call options. So I'll be selling 2 more calls against these oil companies. But I think it's time to accumulate some oil at this point. I mean, it's getting really cheap. It could halve from here, but I think there's some potential, especially if the commodity complex really does another wave up, which I think it probably will. There's a lot of cash out there chasing a limited amount of commodities. So I think it's gonna happen. Let's see, what else do I got here? Anything interesting? SPG. I'm trying to get into Simon Property. It looks like it went down today, 4% almost. And so I have 3 puts, which is quite a bit, expiring at the same date. One of them is a $60 put. The other 2 are $55 puts. And currently I'm sitting at a positive $52 return, even though today took me down an extra $70. Currently I have $515 of liability that's got to be erased, and I am sitting $6 plus above the strike price of one of my contracts. So it's likely, I wouldn't say very likely, but it's likely that these options were going to expire worthless, which will erase $515 of liability for me, which is fantastic. It's like money in my pocket. And what other highlights? Well, finally, maybe I can get to my DEM. So I'm trying to really get into emerging market um, dividend stocks. And you can see a pattern here, right? Because I've been talking about emerging market bonds, and I'm gonna be talking about it, and I'm also trying to get into emerging market dividend stocks as well. And this is basically a valuation play, all right? Not for any other reason. And actually have dividends set to reinvest themselves into this fund as soon as I get them. So I'm really this is gonna be a long-term play, probably. Even though I have a call sold against it, it's all the way at $40. Probably not gonna hit. Expires on December 18th. And I'm trying to accumulate this for the long term. This is gonna be like a 3 to 5 year play. So I'm betting that there's gonna be a slow grind up, slow or fast at some points, in the commodity sector, and I think downwards in the dollar slightly. And so I think that from a macro perspective, right, I think that that shift is going to happen for the next few years. And then beyond that, who knows? I mean, I don't know. I'm not even certain this is going to happen, but it's cheap. So because it's cheap, I'm buying. All right, so let's see if we can get see what the dividend is here. I'm definitely doing some dividend plays, that's for sure. It's 5.5, all right? So these stocks, 5.5. And the PE ratio of this fund is, I think, probably cumulative. It's like 9. All right, price to earnings 9, which is fairly low, especially compared to the U.S. market, which I'm also bullish in the long term. Let's see. That is a good segue for me to talk about the PCY position that I was asked about. PCY is just emerging market bonds. It's either that or like EMB. There's a few tickers that you can use if you want to do emerging market bonds. But why am I holding this instead of US bonds? Well, quite simply is because it's cheaper again, and it actually pays some yield. This is the 5-year chart. It's fairly flat, and I expect it to stay fairly flat for the foreseeable future. Unlike US Treasuries, Unlike US Treasuries, this actually pays a yield. And the yield is 5.5. Let me see. It should be 5.5 as well. Oh, it looks like it's 5, but I just checked it out on Finviz. It's 5.5. Well, anyways, either 5 or 5.5 doesn't matter. So, unlike the Treasury, it actually pays a yield. And if things go down, if they, the emerging market bonds start getting sold off, then the yield is just gonna go up. Okay, so I either get bond appreciation and the yield goes down, which is fine, and I can just sell it into the market if I need to, or it goes down and I just get more yield and I get to complement my long-term play. And it's also a good way for me to store something that's a little bit safer in liquid instead of just leaving it in cash, because I'm not going to be getting that whatever it is 0.35% interest from Robinhood on my idle cash, because I'm using a little bit of margin at the moment, and so I have to park the money somewhere, and I think that emerging markets is the best place to do it. If I had better deals, I'd do it, but I think I'm actually exposing myself a little bit to too much volatility, and the option plays is not going to be enough to dampen that. So this move is purely a strategic move to try to, put the risk tolerance where I like it, and also complement the macro strategy that I have for the account. Okay, and if you know the 4 ways that I make money here, macro balance is one of the ways that I like to make money on this account, right? So that's the rationale. That's the rationale behind it. And second, I want to talk about quickly, just hit on Apple. And what I wanted to say is that even though the PE is right now about 35, I'm anticipating a very, very heavy earnings this quarter, next quarter, and then the following few quarters as well. I think that 5G is going to be a big hit whenever they actually do decide to roll out their phones or whatever else. I know they're coming out with a new watch as well, and that's been a really big seller for Apple and starting to become one of their main products, right? So I definitely think that with their new monetization schemes and trying to expand and branch out into um, other ways of collecting revenue from their customers, I think that their earnings are going to go up. And I already talked about my bullish case scenario for global growth, not just population, but income, household income. My previous videos really, I did a good job of that, presenting some nice graphics or maps, world maps to show you in figures how that development is going to happen. And so if you missed that one, go back and check it out. I don't think you'll regret it. Especially if you've listened this far into the video, that means you can stand my voice, right? So if you can stand my voice, go back and watch that video. You're gonna like it. So, anyways, but I want to talk about the valuation. I think that's gonna get cut in half because the price, even if it stays stable where it is right now, the earnings side of the equation is gonna increase, okay, and therefore the PE is gonna drop. And I think it's one of those. I mean, Apple is not a linear mover. Okay, it goes in waves. It's up and down. I've watched it over the past years how it goes into lulls and things like that. I'm not saying this is a lull, and I think it's far from it. It's just a momentary dip, and I just can't see it go down that far. Like, I'm really not afraid of buying Apple maybe 5% down from here or 10% down from here, and I really don't think it's going to be a huge crash back to like pre virus levels. I just can't see that happening. It's just too much earnings on the horizon, and I can't, I don't think it's going to happen at all. So I'm really not afraid. Maybe another 10% before I can start putting some more money in it. I bought like 5 or 6 shares. I'm trying to buy back some of the stuff I sold during during that split hysteria. In retrospect, I wish I would have sold more. I only sold one of my 4 calls, okay, call options. One of the 4, I wish I sold another one, obviously, and I also sold 5 shares times 4, which would be equivalent to like 20. Yeah, you had a 4-way split, and so I sold some shares, and now I bought back a few, and I also sold that call. So now I'm trying to like build up my position and convert it into actual shares. And I don't know if I'm ever going to buy that call option again. I want something more concrete now that I have the money. I ended up buying that call option at the bottom of the virus crash because I needed a way for to boost my account back to normal levels because I had dropped from 90 to like $44,000. So it was a big drop, and I knew that things were going to rebound just only based on liquidity and buying and the amount of money that was out there and the deals that were available for these companies like Apple. So I was convinced it was going to bounce back. So I ended up selling a bunch of stuff and just buying a call option for Apple, right, to try to recover my gains. And it did happen, right? I mean, if you look at, let's look at the browser again. I'll show you what I'm talking about here. 3 months, 1 year. So here it is. It was sitting about 90,000 and then boom, down to like 44. I've added a couple $1,000 ever since then. So it looks like it doesn't really get it all the way down at the bottom. It says 49. But anyway, it went from 90 to 44. And then now it's all the way up to, it was all the way up to 130. Mainly, due to those call options. So it's a risky play, but, I rode the wave. And I wish I had exited a little bit earlier, but that's fine. I'm probably going to hold the rest of these 3 options to expiration unless something crazy happens, like, Apple goes to 1,000 or something in the next few months. Then I'll probably sell 1 or 2 of them. So here are the gains that I still have, even though it dropped so much in this week. Look at this, minus 20%. I'm still positive $10,000 from these call options, which is substantial. All right, and that's what I gotta say. I think the PE is gonna end up balancing itself out. This NASDAQ correction can last a little bit longer, and I don't know where the bottom is, but I really doubt it's gonna be more than another 10-15% further down. In fact, the pattern that I'm seeing here, this weekly pattern of the double bottom that we're experiencing today, there's a good chance that this is it, and Apple could just grind up slowly from here, continuing its rise. So there's a good chance that I give it about a 50% chance, and then 50% chance that it goes down another 10-15%. But I think that's going to be it. So I'll be loading up some shares if that happens. I have a lot of buying power that I've saved for that in case this happens. Let me show you here. Can you see that? Yes. No, you can't. But I have $28,000 buying power that I can use to buy Apple shares, or I can use to sell puts against. Well, I don't know if I can sell a put against Apple. Let me see actually. All right. So, I mean, I should be able to. Yeah, I can sell a put or something. Okay, first, when you're doing options, always select the date first. Let's say if it drops, how about December? Okay, December 18th. Yeah, I mean, you know, that's good. $9,000, $10,000. It's fine. But anyways, oh, if you want to see the account tab, there it is. Whoop, there it is. So we got this. Look how big Apple is as part of my account now. But I don't really want to trim. I already trimmed some. You can argue that I should be trimming more. But some of the trimming went into emerging market bonds just for safekeeping. So if anything goes wrong and those $28,000 isn't enough and it shrinks because that's the amount of margin I'll get from the account, or I can increase the margin if I want to, but then I'm going to tap into the PCY. All right, I'm going to tap. Oh, and the way I release margin is I'm just going to buy back some of my put options. Okay, so all these put options here, right? Some of them are on margin, so I can just buy them back and I just get my collateral back and I can use it to buy Apple. So I have cash. I mean, I have the money. If it happens, great. If it doesn't, my account will just continue to rise. I mean, I do have 3 Apple call options left, so they're going to continue to power this account up, as well as the current shares that I've accumulated. So I'm kind of ready for both scenarios. The only thing that would really kill me here is if we have a crash, like a really big correction from here, that I start trying to catch the knife a little too early again, like I did in March, and then it keeps precipitating down and eventually cuts my hand clean, right? So that would be the worst case scenario. And I'm guessing if it goes down 10-15%, I'm gonna be like almost all in trying to catch this knife. And if I fail to catch the knife, it goes another 15 or 20% from there. I'm gonna have to start selling assets, okay, just to meet the margin. Otherwise, I'm gonna be put pressure by Robinhood, and it's gonna start selling my assets regardless, right? So that's gonna be trouble. But I don't think that's gonna be the case. There's gonna be volatility, but I want to catch the low end of that volatility. And being in the market is risky. Like, you could lose all your money. So of course this isn't financial advice. If you're confused as to what to do in the markets, obviously consult a financial advisor, a professional one, licensed. They love that. They love to put the licensed professional, okay, because it increases the value of the license, right? So anyway, I think I'm going to end it right there. I'm starting to ramble a little bit, but hopefully you're making a lot more money than me out there. I've been losing, $13,000 in the last week. So there's a good bet that you made more money than me. All right, I think that's it for now. Peace out.